Question is, how can investors cash in on the Fed's decision not to move? I want to bring in Nuveen Asset Management Chief Equity Strategist Bob Dahl. Bob, good morning and welcome. Good to have you here.
Happy Monday.
So as we look at the futures this morning, as we just spoke, the Dow futures now up more than 100 points after that big Friday sell-off following the Fed's lack of moving on interest rates. So it's tough to get a read on this market. Will they or won't they? Did they want the hike? Did they not want the hike? What do you do right now?
The Fed has confused us. There's no question about it. It seems like they've changed the rules of the game, and it's going to take a while for us to figure it all out. Beyond that, we're still in the wake of the big AUKUS correction, and the damage was done to the market, and we're healing from that. So my guess is we're going to see more volatility in both directions.
All right, so what do you do in that environment?
You buy them when you're down, you sell them when they're up. That's easy to say. Okay. I think you need to be focused on companies with positive free cash flow, companies that have unit growth and don't require pricing power. And I'm still of the view the companies that have most of their earnings here in the U.S. rather than outside the U.S.
I want to get to something as we do see these markets rallying right now, because there's a clear move that we saw to the upside in the futures markets this morning. By the way, that's the CBOE Volatility Index, which gives you an idea of fear in the marketplace. It has spiked recently. There is some Fed speak going on this morning. You've got one Fed president saying rates could rise in October. That echoes what Williams told Maria on Sunday Morning Futures on Fox News yesterday, saying we could get a rate hike in October. Is that something that you are remotely planning for?
I think that's very unlikely. I think there's a Fed governor that has said rates will rise next month now for many, many months. So I wouldn't take one guy's view. They could rise in October, no question about it, but I think very unlikely.
Okay, the only reason I say that is just because we do have this move in the markets this morning, and there is some Fed speak going on, but nonetheless, the markets, the Fed fund futures are telling us there's only 11% chance in October and a 30-something% chance that there's going to be a hike in December. So at that point, Darren, we're talking about well into 2016 before we're looking at a rate hike.
Absolutely. I think, the house view at BNP is a December rate hike. You do have the press conference. If it was Asian volatility that caused the Fed not to move, maybe there's the chance that October we have another month of data on whether or not there's volatility in the marketplace and whether they should raise rates at that point. But that would be out of the ordinary. And I think one thing that the Fed has tried to do is be very deliberate in their action. And by that, not surprise the marketplace, because that just creates additional volatility, which is what they're trying to subdue.
It's tough to decide what to do in this environment. So I teased you coming on, Bob, though, with looking at the markets. There were some beaten down sectors, some beaten down stocks last week, particularly after the Fed did not move. The financials got hit hard. Do you like financials at these levels?
Modestly positive. They're the cheapest cyclical in the market, and therefore I think you have to own some. But, they're going to make money when the Fed finally raises rates and the yield curve steepens and so on, just keeps getting postponed.
Well, and trying to buy energy in the last several months has been moving into the hotel of hurt.
No question.
The people have been trying to call it, and investors who are buying keep getting creamed.
Right. I think the message is stick with the things that are delivering the fundamentals. We can't figure the Fed out. We need to understand where the earnings are going to be. That's what's going to move stocks in this period. And I come back to make sure the earnings are there. U.S.-based earnings rather than non-U.S.-based earnings give you a leg up.
You've been quoted, Bob, as saying this is the least believed economic recovery and the least believed bull market of our careers.
Yeah, we're in our 7th year of recovery, and a third of Americans still think we're in a recession.
Well, the Fed clearly thinks things are still pretty bad as well for them not to move, let alone the average person in this country right now who's still looking at a job participation rate at its lowest in history.
I guess what I look at is corporate earnings. They're up 200% from the bottom. I think that justifies the stock market.
Is that enough? So you're bullish U.S. equities based on that alone?
Constructive. The easy money in this bull market, make no mistake about it, is in the rearview mirror. We've had a 22% growth in the first 6 years. We're not going to keep that up. It's going to be much slower and bumpier from here.
So I guess the question is, how do you think earnings season will be this coming quarter? And people have talked about peak margins for corporates. Is that going to continue? And where do you see this earnings season shaking out?
Yeah, I think it's going to be mixed for the very reasons you just said. I think if we can get mid to high single digits out of this, we're going to be very happy, which means some companies will have down earnings. Energy, materials, some of the industrial sector.
If you like U.S.-centric companies, do you like small caps here?
I think down cap makes sense. I'm a mid cap guy and think that that's where you're going to get some opportunities because they get their earnings here and are not subject to the things that are worrying the Fed.
I saved this question for last because it does seem like it's sort of on the back burner for the U.S. investor to worry about. But are you worried about China? Because it does seem like it's everyday conversation now.
Have to be. But slowdown in China is good news for the U.S. in the following sense. We don't export that much to China, and China's weakness has created lower oil prices. That's a tailwind for the United States. The question is if it moves from economic weakness to financial problems. Then it's a negative. I don't think we're there, but that's what we have to watch.
That's great stuff. Bob Dahl, thanks for coming in so early this morning.